Hey Team FG community, John Yonge here with Carlo Cancino. In today's episode of Ask Team FG, we're going to be taking a look at the next generation and how can you get your kids into their first home without having to provide that extra gift to them as well. Remember, if you do enjoy our content, like, comment, and subscribe to the YouTube channel. We love doing these videos for you. In today's episode of Ask Team FG, we're going to be taking a look at the next generation, getting your kids off into their first home. And the reason why this struck a chord with us is we're going through a recent news article that essentially said about 68 or
70%,
70%, close enough, about 70% of kids nowadays are requiring parental help or potentially even an inheritance in order to get into their first home. We thought that was a pretty staggering number. Believable, however, based on the way the markets have been. So we're going to think the opposite direction. How can you have your kid not be one of those statistics, and how can you have he or she be able to save enough in order to get into their own home without having to dip into the bank of mom and dad? Yeah. So, Carla, why don't you get us started with a couple options for them?
Perfect. Thanks, John. Yes. In order for the next generation to get into the housing market, some things have to be done on their end. Skin has to be in the game. So what are things that they can do to help themselves? Number one, the savings. Regardless of the amount that you can put away, automated savings has to happen. Before you use any of your cash flow for discretionary spending, make sure savings is treated like your cell phone bill, car insurance, car payments, any expense that you would pay for. Ensure that savings is one of those so you can get used to money going and being set aside for that eventual down payment. Far too often we have young clients spend their cash flow, wait until the end of the month to determine what's left over, and put that in as a lump sum. Far too often that all of that gets spent in extra expenses. Inflation has been very high. That money doesn't go as far. So if you can set up something automated, get it out of your bank account into an investment plan, you're going to be better off.
Absolutely, and to that point as well, I feel like especially now the younger generation, or even some of in the older generation, get really hung up on the fact of I need the highest rate of return. While granted, a rate of return does help, the most important thing that you can control is going to be your savings rate. How much can you set aside based on the amount of income you have coming in? Finance from that point is pretty easy. You know how much you have coming in, you know how much you need to spend, you know how much you need to save. And as long as you focus on that, you'll be in a really good situation. So now if we're coupling that, the savings rate and where you can put your money towards, the government offers a lot of different options or incentives that maybe your children can utilize in order to get themselves into their first home. And I'll get started with the newest account, I guess, which would be the First Home Savings Account. That was recently made available by the Government of Canada as early as 2023, and that allows them to put away $8,000 into this First Home Savings Account. You get a tax deduction as if it's like an RRSP, and for the next 5 years, or $8,000 per year, up to a total of $40,000, you can start setting aside money for your first home purchase. You get the tax deductions along the way. All the growth in the account is tax-free, and then therefore you're able to withdraw from that account in order for the first home purchase. Pretty much a no-brainer. If you're looking to purchase your first home, the First Home Savings Account is a great tool. Next would be the RSP. Now the RSP, you originally were allowed to take up to $35,000 out of your RSP in order to put towards a first home purchase. More recently, the government has increased that amount. Now it's up to $60,000 that a younger Canadian can use towards putting towards a first home purchase. A little bit different than the First Home Savings Account, however. If it's taken from the RSP, it does have to be paid back. And the government is being a little bit more lenient. They're actually adding on an extra 5 years that you can use towards paying that back towards your RSP again. But essentially treat it like an interest-free loan you're taking from yourself, you're taking from your retirement to put into the home. And lastly, what's become available from the government is they're allowing up to 30-year amortization for first-time home buyers. We've done a video on this previously with our opinions on it. However, regardless what our opinion is, essentially it does bring down the mortgage payment amount for first-time home buyers, making affordability a little bit easier for them to get into their first home. So there's a couple options that the government has provided or laid out that maybe you or even your children can take advantage of in order to get into your first home.
Yeah, perfect. Thanks, John, for pointing those out. I mentioned in the first point, make sure savings is done first. treat it like
Yeah.
an expense, pay yourself first. Those are the places where this automated savings would go. First home savings account, RRSP, to utilize a withdrawal under the home buyer's plan. The third and final tip that we have talked about, how it can make it a little bit easier to get into the housing market as a first-time buyer, is considering joint ownership or
Yeah.
co-ownership. Whether that's with your parents going on title, whether that's with a family member, a brother, a sister, a cousin, or with a friend. Now, there are some risks involved in purchasing a piece of real estate with a friend or a sibling. If you set up the ownership in the right way, then your interests will be taken care of should anything happen.
Yeah.
For instance, going on title as joint tenants in common
Yep.
means that your piece of the property will always be yours. If you pass away, your part of the property goes through your estate and to whoever you leave that piece of property to in your will.
Yeah, no, excellent points there, Carlo. And these are the tools that you can utilize. And like we said at the start, I mean, it's a staggering statistic, 70% of young individuals needing financial assistance in order to get into their first home. Ideally, we want to change that. A big part of what we do is not only focusing on, maybe your retirement per se, but it's also focusing on your family's needs as well. And this becoming a pretty important one for a lot of young Canadians today. So let us know down in the comment section below. Maybe you're a first-time home buyer or soon-to-be home buyer. What tools are you utilizing in order to make that dream a reality? As always, if you did enjoy this video, remember to like, comment, and subscribe to our YouTube channel. But until next time, I'm John Iaconetti,
I'm Carlo Cancino.
and this has been
Ask TMFG.